The Bangko Sentral ng Pilipinas signals another rate cut before the year end after the Monetary Board delivers a 25 basis point reduction to support growth amid global trade uncertainty. More from Su Jin Kim.
The Monetary Board decided to cut interest rates by another 25 basis points as inflation slows and economic risks persist. This marks the fourth rate cut since the easing cycle began, with a total reduction of 100 basis points in the key policy rate. Alongside the cut, the BSP also adjusted the overnight deposit and lending rates to 5% and 6% respectively.
We contemplate further cuts this year. You can't tell me exactly how many more cuts, but there's a further cuts this year.
Still do it in baby steps. We're still doing 25 basis points at a time, but I can't tell you how many more times.
But there's still room to go further, to dial down, make the monetary policy less restrictive moving forward, and that should help economic growth move the momentum to be maintained, and then we will close that gap.
The BSP's risk-adjusted inflation forecast for 2025 dropped sharply from 3.5% in February to just 2.3% this April. Forecasts for 2026 and 2027 also eased to 3.3% and 3.2% respectively.
Like the rest of the world, we're looking at slower growth. But unlike the rest of the world, we're also looking at lower inflation. The rest of the world is looking at higher inflation. The lower inflation rates that we're looking at give us more degrees of freedom.
With the more manageable inflation outlook, the BSP remains open to further easing, but signals it may wrap up the rate-cutting cycle within the year.
For now, we think we will have completed the easing cycle in 2025. Possible risk is that we begin to see a hard landing.
Still, the BSP remains confident that the country can meet its growth targets despite global headwinds.
Growth near the low end of the DBCC, that could still be a scenario moving forward, depending on how the external environment progresses from now on.
With 100 basis points already shaved off the key interest rate since August, the central bank is treading carefully, easing in small steps but with one eye on inflation and the other on the risk of an economic slowdown. Su Jin Kim, Billionaire News Channel.